I am the Chief Content Officer of Clara Media. I also wear another hat, which is I'm the editor and publisher of Fin, which is a newsletter devoted to the fintech industry that I started publishing in October, not quite anticipating that the news would overtake things as thoroughly as it has. So I'll start with Alexis Goldstein. Alexis is a senior policy analyst at Americans for Financial Reform. She also writes a newsletter, which I highly recommend, called Markets Weekly. She's been everywhere this week on this story. I heard her on BBC World Service, and then I looked at the New York Times, and there she was. So we're really happy that she can join us. And then Christine Ligorio-Chafkin is a senior writer at Inc. magazine and also the author of a history of Reddit called We Are the Nerds. And even though this is my first Techonomy panel, I have a long history of bantering with Christine on a now gone podcast called Inc. Uncensored. Anyway, Christine, I want to start with you because Reddit is really, while the ramifications of this story have gone everywhere, it really does kind of start with Reddit. And so I wonder if you could give us a little bit of the sense of the culture of the place and how I'm sure it came as very little surprise to you that it would spawn something quite like this.
Yeah, absolutely, Jim. I want to thank you so much for having me, Jim. Congrats on the new role, and thank you, David and Josh, as well. Yeah, I wrote this book about Reddit that came out 2 years ago, and learned so much about just the origins of the site, the growth of Reddit, its communities. I mean, it's like tens of thousands of different communities. Of course, everyone's learned about it through Wall Street Bets this week. But Reddit itself is a fascinating place where people, post anonymously or pseudonymously, as they like to call it, under usernames that may or may not represent who they are as a person. It's folks from all walks of life, and I think what we saw this week was obviously a bunch of sort of amateur day traders who come together in a group called Wall Street Bets, and we can't really make any assumptions about who they are. A lot of mainstream media has been saying that they are, these non-affluent, casual, young male traders who want to just have a piece of the pie. And this community has been very active in the last 2 weeks, saying, okay, they're underestimating us. We actually know what we're doing, and this is actually just our fun money. So we're having fun with it. And I think that's a good way to look at Reddit as a whole. Is it's like a big mirror of the internet. It's not any one thing. Yes, it skews male. Yes, it skews young, but that's not everyone on the site. So I think it's worth kind of taking every generalization with a grain of salt.
Do you think there is something specific to Reddit that lends itself to this kind of group investment activity? I mean, I could sort of see it on Twitter. I don't really see it happening on Facebook. There's a YouTube component, but just sort of looking at different types of social media, is there something specific to Reddit about this?
Sure, there's actually a few different elements that kind of come together in perfect storms like this. One thing to take into consideration is Reddit has always had a kind of wry sense of humor to it, and many of its communities reflect that. It's sort of an anti-establishment sentiment in general, always does well on Reddit. Think of like back in the early days of Reddit, like I think it was a decade ago, there was this Greenpeace program where they were like letting people online name a whale that they were tracking, and Reddit kind of jumped in and said, hey, what if we all vote? What if we all get into this? And they decided they were going to name their whale not something like Ariana or Goddess of the Sea. They were going to name it Mr. Splashy Pants. And
Yeah.
you know what? The Redditors showed up in force and they like named that whale Mr. Splashy Pants. I mean, it's silly and ridiculous, but it shows the power of the crowd online, and it shows Reddit's kind of interesting, like stick it to the man sensibility that that is also reflected a decade later right here and in what we're talking about.
Yeah. Alexis, when this story first started to grab mainstream attention, it was most often portrayed as a David versus Goliath battle. You have, these huge institutional evil hedge funds on Wall Street who are shorting innocent little stocks like GameStop and AMC, and then you have these feisty, band of individuals. you have a great line about this that I don't want to steal from you, but I gather you don't entirely accept that frame.
Thanks, James. Good to be here, and hi, Christine, and everybody else. Yeah, my basic theory is this is not David versus Goliath. This is Goliath versus Goliath, with David as sort of a fig leaf or a smoke screen or a distraction. Which isn't to say that this probably didn't originate on Reddit. I think it absolutely did. Maybe you point it back further to the YouTube channel Roaring Kitty, who is on the subreddit as Deep F and Value is his name on the subreddit. But I think the important context here, so my background is I used to work on Wall Street, and Wall Street.
What did you do exactly, Alexis?
So first I was a programmer. I worked at Morgan Stanley, and we built software that we gave away to hedge funds for free, because hedge fund order flow is so valuable to big Wall Street firms that we were willing to like spend probably millions of dollars, honestly, building this trading software for them just in order to get their flow. And that's going to be important when we start to talk about Robinhood, because Robinhood's order flow is so attractive to a firm like Citadel that they pay for the order flow. But let's put a pin in that for a second.
We'll get to that.
So I was a programmer first. My degree is into computer science, and then I moved into what's called business analysis, which is sort of like the intermediary between the traders and the tech team. And so I was basically helping to develop improvements. This is when I was at Merrill Lynch, before and after the financial crisis, improve our internal trading software and our internal risk management and monitoring tools. And so I worked with the equity derivatives trading desk. So I was working with the people who trade single name equity options all day long, both on exchange and over the counter. So that's my background. And the folks I used to work with, they would guard their positions ferociously, so ferociously that they would actually pay a third party called an interdealer broker for the sole purpose of anonymizing their trading. So when Morgan Stanley wanted to trade with Goldman Sachs, they would pay a third party to sit in the middle just so the two of them didn't know who was on the other side of the trade. And now all of a sudden you have tens of thousands of people not only saying what their positions are, what they're going to buy, what their plans are, they're saying that they plan to hold it, and they have their own sort of like cultural attitude, right? They talk about diamond hands, I have diamond hands, I'm going to hold this, I'm never going to sell it. But that's a gold mine for Wall Street. That's Wall Street's like best dream come true, is knowing what tens of thousands of people are going to do tomorrow. And so my suspicion is, yes, Reddit had a lot of interest. Robinhood, there was a lot of retail trading in this name. I suspect whenever the regulators, hopefully they're doing it right now, look at this, it was not just retail traders trading this name. I suspect Wall Street was watching this and said, oh, this is great. We can ride this all the way up, then we can ride it all the way back down. And so I suspect that's one avenue of the Goliath versus Goliath frame. The other is more simple, which is just that the Goliaths make money whether the stock market goes up or down if they're in what's called a sort of flow role. And that is what the folks I used to work with were in. They were hedged, right? Whatever position, they were sort of like a market maker, not exactly a market maker, but they were facilitating liquidity. So they would hedge whatever position they undertook and trade around it and manage their risk and try to find some very tiny edge, but they would make the most money of the year when there was really volatile days. So I don't have a crystal ball, but my prediction is the first quarter earnings from some of the largest trading Wall Street firms that have very serious flow trading desks are probably going to be astronomically high, if not record breaking. And so that's why I don't really believe that David has slayed Goliath at all. If anything, David might have lined Goliath's pockets a little bit more, which isn't to say there aren't a lot of Davids making a lot of money right now. There absolutely are.
And
I just think Goliath
and some losing money.
For sure, absolutely. I just don't think we've slayed Goliath. So that's my narrative twist.
I've been trying throughout this to figure out exactly, if anything, what is new. I was around in the late 90s when day trading was a very popular thing, and in those days you actually had to pay every time you made a trade, and so that was sort of a restraint.
Don't you remember though? Because I was around then too as a teenager, getting my feet wet, and there was one brokerage that was free, and I don't remember the name of it. It was like America something or another, and then it collapsed right when the bubble burst.
Right.
But even that part isn't new.
And there were message boards, right? There was a site called Raging Bull where people would just go on and say what they were doing. There were the Yahoo message boards were filled with stock tips, but I certainly don't remember anything having an impact like this? And maybe it's a question of scale, that Reddit's just so huge in a way that the internet wasn't. But do you, Alexis, I take your point about the profitability of Wall Street firms no matter what happens. But do you think that this episode, especially if we figure that it is likely to reoccur, is going to change the way that some funds, hedge funds or whatever, execute a short strategy? Are they going to have to adapt what they're doing, or can they kind of ride this out?
I mean, it's a good question, James. I think there will absolutely be adjustments made. I think just in the short term, option premiums are already sky high now, right? And I don't know what baseline level of knowledge I should assume for this conversation or not, but
I think you can feel free to explain terms.
Okay, so options, right, give you the right but not the obligation to buy or sell 100 shares of stock in the future. One of the components of option pricing is time to expiration, but in my opinion, the most important component of the price of an option is what's called the implied volatility, which is how much do you expect the stock to churn. And if you look at, and that's something you can measure, right? The implied volatility for some of these names is like astronomical right now, like 200% or more. And so that means people selling options are demanding a higher premium for the sort of risk that they're undertaking. And I think we're going to see that perpetuate into the future. I think a lot of people are going to be worried as sellers of options that they're going to get run over by something like this. And so they're going to demand more premium. And I certainly think, hopefully, that hedge funds are going to account for this sort of, maybe it's a tail risk. I don't really know what kind of risk you would quite categorize it as, but hopefully they're buying some options to hedge their positions a little bit better than it seems like some of them did. But I do agree with you that this isn't really new. I will say what I do think is new is the sheer volume of retail trading has gone up. I believe it is now 25%, at least in stocks, that's unprecedented. So that piece is new, but it's still 25% versus 75, right? So that's where my Goliath argument.
Let me take a moment and share the results of the poll that we did with folks. Can you see it?
Yes.
Do people see it? So most of us have not bought stock in GameStop, although some wish they had. If you were
the correct
a Robinhood,
answer to that question is I wish. Everyone should have put I wish on
it. Two, if you were a Robinhood investor, would you leave the platform? Most unsure, but a slight plurality there for yes. Do you think the cost that Robinhood paid for its intervention was too high, 21%, too low, 42%, and just enough, 38%? That's a pretty interesting finding. And then we'll get to the regulation piece in a minute, but let's look at this. Do you think the Biden administration will crack down on social media's involvement in investing? Pretty small percentage saying yes. Yes, but not enough, 19%, and more saying no. Thank you for those who participated in the poll. I'll get to the regulation piece in a minute, but Christine, Reddit's not going away. This particular subreddit is not going away. If anything, it's probably attracted a huge number of participants in the last week or so. I noticed recently that there are alternative data firms who are now selling a product that will like scrape Reddit for you to find out what stocks people are recommending. And to Alexis's point, that could be hugely valuable for lots of people. Where do you see this going? Do you think Reddit perceives it as a problem? I saw an interview with Alexis Ohanian where he was basically like, hey, compared to the pandemic, this is no big deal. Where do you think that they want anything to change, and will anything change?
Yeah, I mean, I also saw that, and I saw an interview with Steve Huffman as well, in which he said, I've been watching this. I'm a casual observer of Wall Street Bets. I love watching it. I'm not an investor myself, but he seemed to like just be totally in support of the community, and he's kind of historically been willing to comply with any regulations and listen to the government. But I mean, he did seem to be just completely holding the line in terms of like, this is legal activity in my understanding, and and this can and should continue. And listening to the tone of Redditors today on Wall Street Bets, they're very much, even as GameStop is down to what, like 67 today, down from over 300 earlier a few days ago. One of the quotes was, two things stand true. Apes together strong. You only live once. Ride with me to the gates of Valhalla. So, they're like still rallying this or trying to. And, now some are saying, I came for GME/AMC. I'm staying for the cause. So they see something in unity here. And, in times, historically on Reddit, in times of like slow energy in terms of culture and slow just time in people's lives, like during a Thanksgiving break or a winter break or a summer break from school, that's when the crazy stuff blows up on Reddit. So I think that during this pandemic we will continue to see, anytime there's a slower news cycle, something like this may bubble up. Whether it's the same or completely different remains to be seen. I'm very glad you asked Alexis that last question, because that was on my mind too.
Let's talk a little bit about regulation as a signal of just how kind of massive and weird this story is. Janet Yellen, our new Treasury Secretary, appeared on Good Morning America this morning, which normally you would think of a Treasury Secretary, maybe CNBC, maybe PBS, but like Good Morning America, our Treasury Secretary saying she really thinks that the government should look into this and will definitely, take a very, very serious look at this. And one of my questions, Alexis, is what are they going to look at? Because I'm not even sure there's a consensus among, say, members of Congress or other kind of leaders what the problem is. You have some people who think the problem is too many people collaborating on Reddit and Robinhood to move the direction of a stock. You have some people who think the problem is Robinhood cutting off the stock. You have sort of all, and it's not clear to me what is going to be investigated and what should be done. What do you think about this?
So I have a few different ideas, and I think this is just my take, right? But I don't think that investigating Reddit for market manipulation is the way that this should go, and nor do I think that that is the way that it will go. If it does go that way, I think they will be looking into whether or not there were like registered financial professionals that were using burner accounts to post on Reddit in ways that they shouldn't have as, professionals. I think that is probably the extent to which they will be looking at Reddit. Again, this is just my guess. I think what they're going to be looking at is some of the bigger players here, right? So Robinhood sells its order flow to multiple market makers, but the main market maker that it sells its flow to is Citadel Securities, which is owned by Citadel LLC. One of the hedge funds that blew up as a result of all of this is called Melvin Capital, and they were short GameStop. And one of the firms that rescued Melvin Capital happens to be Citadel. The other hedge fund that rescued them is Steve Cohen's new firm, Steve Cohen, formerly of SAC Capital, which pled guilty in 2013 to insider trading and had to shut down. His new firm is Point72. So Point72 and Citadel now have a revenue sharing agreement with Melvin Capital. So if Melvin Capital manages to be profitable in the future, Citadel and Point72 will get some sort of a cut. I don't know that anyone has reported on the exact terms of that deal, other than they gave them $2.75 billion. So I don't know that I can say if it's a good or a bad deal, because I don't know what chunk of their revenue they get, but Citadel and Point72 are pretty savvy. So I'm guessing it was a good deal. And so why do I bring that up? I bring that up to say that Citadel is making money on two directions of this, right? They're making money purely from the Robinhood order flow every single day as the primary market maker that Robinhood is selling order flow to. They probably made money off of this Melvin collapse, or at least they believe they will in the future. Citadel manages over 40% of all retail stock trading. They are the biggest market maker for retail stock trading. They are also the biggest market maker for equity options, period. So I think that raises questions, and this is why the Janet Yellen meeting today is important. The sort of roundtable of financial regulators that's officially known as the Financial Stability Oversight Council can designate non-banks as systemically important if they feel it poses a risk to the financial system. I do think Citadel is such a significant and important player at this point. You're going to have some regulators asking that question, not just about Citadel, but they happen to be in the news right now. So I think they may ask the question about them. One of the things the Trump administration shut down was a regulatory task force looking at the risks posed to the system by hedge funds. I think it's probably likely that that will restart. Steven Mnuchin shut it down. I'm guessing Janet Yellen will bring it back. And I think we're probably going to have a big debate about payment for order flow, which I learned actually just this week or last was invented by Bernie Madoff in the 1980s. I didn't realize that. Yeah.
Let's talk about payment for order flow a little bit, because it certainly has come up a number of times. It is the payment for order flow that allows a place like Robinhood to trade for free, right? So the customers, the retail investors don't have to pay anything for their trades, and Robinhood, and not just Robinhood, but Schwab and E-Trade and many others make that money up and then some by selling those trades to a third party. In the case of Robinhood, I think it's a small majority goes to Citadel.
There's also Two Sigma and I think Verdue, which is owned by Morgan Stanley. Yeah.
And so this has been around for a while. It's long been controversial, and at least in theory, it could be banned, right? But talk a little bit about the history of it and the importance of it and how it might change.
So it's interesting. So at the tail end of the Obama administration, I can't tell you, I don't know the history between when was it invented, the 80s to 2016. I can start us at 2016 though, if someone else wants to fill in the gaps, that would be great. But in 2016, the SEC asked one of its external market advisory committees whether or not payment for order flow was just too confusing. Was it sort of obscuring what the true cost of a trade is? Because your trade seems free because you don't pay commission, but what your broker is supposed to do is sort of give your order flow to the market maker that can provide what's called best execution. And that could either mean the best execution price, or it could mean, they do it the fastest and they take care of your quantity in the best way. What they're not supposed to do is sell your order flow to the highest bidder. And I think what we've seen, and even the SEC itself found last month, was that from 2015 to 2018, Robinhood was not only not guaranteeing its customers best execution, they were not routing it to the market maker that would give them the best execution. They actually cost Robinhood customers $34 million in total, even when you take into account the free commissions, because their execution was so bad. And so I think the sort of concern with payment for order flow is it's sort of hiding the true cost. And some brokerages make what's called their price improvement numbers public. Schwab does that, for example. So if you send an order to Schwab and you send them like a market order or even a limit order, I want to buy at $1, and they execute it at 99 cents. It'll say right there, price improvement, 1 penny. Robinhood doesn't give that information to its users.
And I think there's a reason for that. Is that they're, at least according to the SEC, they're very often not providing the best price, even though they're supposed to.
So I think it's sort of like a question of like, where do you want the money to come out of your pocket if you're a retail trader, right? Do you want to sort of know up front how much it's costing you? Or does it make you feel better to have a free commission, but maybe your execution price isn't as good? And I think that's sort of the debate that we're going to see. And I think what's probably likely to happen is they're going to want more transparency and more clarity, right? But I'm not sure.
So if you ban payment for order flow, what are firms like Robinhood and Schwab, et cetera, going to do to execute those trades instead? And won't it have a profound impact on their business model?
I mean, I assume they're going to have to go back to charging commission, right? And some of them still do, right? Like Interactive Brokers does, it's just lower. I think Robinhood pushed the price of commission down for a lot of people. Schwab became commission free, I believe, just for stock trading. There's still a sort of small commission for options. But I think, in the immediate term, they're just going to have to raise commission prices. But Wall Street is inventive, it engineers its way around lots of problems. So I'm sure there are alternatives, but that would be my guess in the very short term.
I think it's totally
Go ahead,
fascinating
Christine.
here too. I was just going to ask, I noticed in the chat that Esther Dyson added that, there are enough people on Robinhood who she says are simply not able to resist a service that is fundamentally trying to addict them. I think that there is something fascinating here in the ease of use of Robinhood, right? And the tiny amounts of money that people can put in. It's just through an app on your phone. It's very easy to sit on your couch and do casual trading, right? Like that's something that hasn't really existed before. That's just in so many people's pockets, just on the ready. And I think that kind of ties in with like the rest of how we're looking at Silicon Valley and social media and regulation, in that, is there something wrong with the interface? Like, is it too easy? Is it too fun to use? And can we regulate that, or should we think about it?
Well, and to Christine's point and to Esther's point, I think much like Facebook is addictive, right? Once you get on the platform, it has this ability to try to suck you in and recommend you look at other things so you stay on the platform. I think Robinhood is similar and YouTube is similar, right? And so I think there's sort of this fundamental question now where if the product is free, does that mean I'm the product? Yeah. And I think for Facebook, that's true. And for Robinhood, that's true.
Yeah, and in my mind, there's no question that the ease of use of Robinhood, not only borders on manipulation, but just crosses that line. I mean, last year, when the Massachusetts Attorney General sued Robinhood, there were cases of like people who'd never traded before in their lives who are now trading on average 58 times a day. And some ridiculous percentage, 67% or something like that, of people who'd signed up in Massachusetts were authorized to do options trading. Options trading being, very, very risky. And I mean, I've been a modest investor for decades, and I'm not sure I should be doing options trading. And then the confetti that flies when you make a trade on Robinhood. I mean, it really is a kind of over the top candy for people. And but again, the questions that come up around enforcement really make me wonder. I mean, Alexis, you said earlier you don't think that Reddit would be investigated for market manipulation. We had a question to that effect from Andy Sternlib. Says, if Redditors are working in concert, why isn't it market manipulation subject to SEC enforcement? And I guess that is the question. Like, what is the line between saying that you just bought shares in GameStop and actually manipulation? That's the first question, and then I have a second one.
I mean, I think that's a question for a securities attorney, which I am not. But my sense is it sort of has to do with what is your positioning? I'm going to forget the section number. I have it up on a tab, and I don't want to botch it. But there's it might be 17B, but that might be wrong. It doesn't matter. There's a section of the securities law that basically talks about like, you don't want to be paid to promote something, but right. Then it's sort of been interpreted in like a more and more loose way over the years, where it's like, maybe if you have a large position in something, like, okay, so I think if we are going to talk about this and we are going to talk about people banding together and driving up the price of something, we shouldn't be talking about the people on Reddit. We should be talking about Elon Musk.
Elon Musk, I was just going to say.
50 million followers on Twitter. There's somebody out there. There is a big whale in the Dogecoin market. So Dogecoin is one of the cryptocurrencies. It was begun as a joke. The inventor of Dogecoin was like, I give up. I turn this over to the community because this was a joke. It wasn't supposed to go this far. And if you guys want to keep going, great, but I'm done. And there's somebody out there with something like, I think it's like 34 billion Dogecoins, and it's 27% of the whole market. And we don't know who it is, right? We have no idea. Maybe it's Elon Musk. Maybe it's Jeff Bezos. Maybe it's a hedge fund. Maybe it's a dog. Maybe it's my dog. I don't know. But, I think if we're going to go that route, we should probably look at people with a little bit more power than these sort of people working collectively together on Reddit. But I just don't know. I mean, maybe we have a securities lawyer here somewhere, but I think it's a sort of a question of what you can and can't do under the existing law.
Speaking of Dogecoin, we've had a couple of questions in the chat about whether this event, that is the GameStop saga, has had an impact on the prices of other assets, notably cryptocurrencies. Certainly, there have January saw tremendous spikes in both Bitcoin and Dogecoin and probably others that I don't pay as close attention to. Christine, is this something that you've reported on?
It's it's not something I've reported on so much as casually like to follow. Yeah, Ethereum has climbed a lot.
Yeah.
It climbed, like you mentioned, over the last 3 months, and then all of a sudden it's doubled again, like today or yesterday. I hadn't looked at it in a couple days, but today it's doubled from when I last looked. And I do think that it's related, although I have not done my research over the last 2 days, unfortunately. I do think that when GameStop kind of solidified, I think a lot of people on the forums were all of a sudden a little bored and with a little bit of extra money, and saw that their efforts on making silver move were not working due to a complex network of factors that I'm sure Alexis understands far better than I do. But they can move Ethereum, they can move Dogecoin. I mean, I guess I do think that like all of this really does show that I think it's given the public a greater awareness of the volatility of markets and of the inflation of them. Like anything Elon Musk touches is overvalued, right? I mean, that's really interesting, and everyone kind of knows it now. So whether this stuff continues, it will kind of just keep giving the public greater awareness, and I'm so curious what happens next.
Yeah, I don't have like a scientific analysis. I just like have my own observations, which are akin to what Christine said. I've noticed often when the market will close, right, and people can't trade anymore, sometimes you'll start to see price movement in crypto.
You're right.
And I feel like, yeah, so you see a lot of overnight spikes. This is not investment advice, just for the record.
It's so funny. I was looking at Dogecoin yesterday, and I noticed it spiked around 420, and I thought it was a pot thing. But it's the mark's closed. That's
and Elon Musk did tweet several times, right. I believe at 3 a.m. So I think
right. So I think that's a part of the answer to the question that was put in the chat is like, are these things connected? I think they are connected, but maybe not strictly cause and effect. Certainly, Musk is something that both phenomena have in common. He's and if you follow crypto Twitter, which for my sins I do, you'll see there's a lot of this kind of behavior of people, cheering on a particular cryptocurrency or saying it's going to go to 1,000, and it's this combination of kind of bluster, wishful thinking, and to some degree, trying to create a consensus and a movement behind a particular asset. Here's a question from Richard. I don't know if it's Reisman or Riesman, but he's written a terrific piece for Techonomy, which I encourage everyone to check out. He says, please comment on the parallels of financial markets with social media marketplace of ideas concerns. My Techonomy article refers to openness, velocity, and virality, and how explosions can be diffused. What are the implications on how to reform social media with better design, better business models, better regulation, to be better at augmenting the human wisdom of the crowd instead of our madness? Christine, this is something that you've thought a lot about. What do you make of Richard's comment?
I love Richard's comment, and I am certainly not sure how to solve all of these issues, which are many and very complex. I do think they're all tied together, Richard, and I do think that the velocity with which things move online is related not only to kind of the way we interact with sites, and like we were talking about, the ease of design and ease of doing very, very complicated things, but it's also due to kind of the algorithms for amplification. And we talked about this last time I was here, doing a panel on Techonomy. These algorithms do to kind of expose our worst selves and cause the worst impulses to go viral, right? And the kind of stuff that we've seen, and everyone's heard it over and over again, that the kind of vitriol is the most viral sentiment, right? I mean, it's hard to figure out how to rein in an algorithm, right? And we did talk about this a little bit last time too. Is that something Congress can regulate and tell a company directly, like, here's what's wrong with you, fix your algorithm? That really remains to be seen, and I kind of doubt it. But
Yeah.
it does have to do with, look at Robinhood. I mean, I think that there's a lot of problems with it that maybe go deeper than just this one little event.
No question. In
Yeah.
fact, let's talk a little bit about Robinhood.
Before you shift,
Yeah,
can I
no,
just give
please,
a slightly different answer to it?
please.
The question inspired me. So if you think about the same thing, but in the financial markets, what I think about is not so much the algorithm pumping up the content, but the high frequency trading algorithms trading around all of these orders. And I think there's an open question about whether that's a good or a bad thing. Do we want to incentivize people to create these high frequency trading algorithms that move around? And I think they may have had a part in pushing this up, and they may have had a part in the volatility. So if you think that high frequency trading may be a problem, one policy way to solve that is a financial transaction tax, which would slow that down somewhat. So anyway,
Yeah.
I didn't mean to interrupt. I just want to throw that
No,
in
no.
there.
I believe me. Financial transaction tax was on my list of questions. This, for those who don't follow these things, this is an idea that goes back at least to the '60s. I think James Tobin, or maybe early '70s. Very straightforward idea that every time you have a transaction like this, people buying or selling a stock, they have to pay a small fee to the government, which can then help reduce inequality, or whatever government chooses to spend it on.
And we already have one right now. There are SEC fees built in already into your trading
for certain kinds of trades, right?
Right.
For short sales, or and of course there's a difference in short-term capital gains tax and long-term capital gains tax. But I think if we envision a universal financial transaction tax, one, I mean, do you think that would have a meaningful restraint on this kind of activity? And two, how politically possible or plausible is it with very thin Democratic majorities in both houses, and some Democrats who I'm sure would not be enthusiastic with? I mean, Chuck Schumer, who is the majority leader, is pretty close to Wall Street. Do you think it's really a politically viable idea?
I mean, I think it depends on the policy proposal, right? It all depends on, how much are we talking and who does it apply to. But I do think in this moment, we're going to hear about it. And I think it's not totally out of the realm of possibility.
Yeah. So let's talk a little bit about Robinhood. Certainly, a week ago, it was not hard to imagine Robinhood just sort of collapsing. Both, the platform was glitching horribly, and people were protesting outside their headquarters in Menlo Park, which I love because nobody was in the office because of the lockdown. And a guy flew a plane over San Francisco that said something obscene about Robinhood. And it could also sort of collapse as a business. And then, in one night, Robinhood raised $1 billion, and then a couple of days later raised another, is it $3.4 billion or $2.4 billion on top of that, which, by the way, is incredible. I mean, how many companies can raise $1 billion in the lifetime of their firm, much less in overnight? So that's another part of this that's sort of amazing. But at least for the moment, you could make a case that things look okay for Robinhood. Not only this fresh infusion of cash that should help them meet the capital requirements that they lacked, that made them shut down the trading of GameStop and several other stocks, but also, they're talking about they got 1 million downloads of the app on Friday, and they'll more than make up for the angry customers who left them. What do we think about the future of Robinhood?
I mean, I think that they're going to have a lot of regulatory scrutiny. I think they're not the only ones. I think they're certainly going to have a lot of congressional scrutiny. I think it'll be interesting to see if they can sustain the momentum, because there are, I think it's probably not too crazy to say, a lot of retail traders who've now lost a lot of money and maybe taking a breather. Will they supplement that by people who are more interested? I mean, to some extent, I think it's going to be driven by media attention. I mean, I don't know about all of you, but I got at least 3 texts last week from people saying, should I invest in Dogecoin right now? And none of them were from people who had ever asked me about financial markets ever before, right?
Yeah.
So I think the sort of media attention has a role too in sort of inflating these equity bubbles. And are we past that point now, or is the volatility going to come back? And I think that to some extent, I think the success of Robinhood may hinge on that, is how much this continues in the popular imagination. And I don't think we can sort of take it outside of the broader context, right? I think a lot of people, there's been research, casino gambling does not increase during recessions, but lottery tickets do. And I don't know where Robinhood is on the spectrum of going to a casino or getting a lottery ticket, but it seems, at least so far in our sort of pandemic induced recession, that has benefited Robinhood. I think the question is that going to continue when we start to get less austerity than I think we did in the Trump administration? The Democrats are trying very hard right now to pass this big package through reconciliation. But I don't know. I'm not sure whether this is going to be good or bad for Robinhood. I think if anything, if I were to guess, somebody's going to scoop Robinhood up and the founders are going to make a lot of money. I think that's probably my best guess. I'm curious what Christine thinks.
I mean, if you listen to the founders speak this week, I think they really left something to be desired. So I would welcome a voice that actually can explain Robinhood to the public, to that company, because it really leaves something to be desired. I think that it's interesting. You're right that they are kind of the fates are tied together, right? And I think that we'll have to watch Robinhood's popularity going forward. Redditors are saying today, oh, I opened up an E-Trade account. I'm going to go that way. It takes a little longer. It's going to be a little more expensive for me, but I've learned a thing or two about what not to trust. So we'll see. I mean, maybe some of these folks will become more educated traders, and this is just a kind of way in for them. Same with some of the folks who have little shares of Ethereum, Dogecoin, whatever. I mean, this is kind of a hobby thing for now, but if it continues to really move markets and folks keep experimenting, then we're in for a wild ride, I think. I'm curious, Jim, what you think about the future of Robinhood, because and the future of sort of what is securities fraud, the definition of that, because I think when you have all these casual day traders kind of banding together, weird things happen. And also people, even a person sitting on their couch using Robinhood, does have a little bit of information they're working with sometimes when they make those trades, right? I don't know. I'm not any kind of expert here, and I love the line, all trading is insider trading. But so I like my brain kind of goes there always. But what do you think? What do you make of it?
So I'm happy to talk about that. I just want to note we got a comment from Justin Douglas in the chat. Says, yes, here in the UK, I'm not familiar with Robinhood, but I've had a look during this call. If I had access to a zero commission, easy platform, I would be so attracted to that. So even people unfamiliar with it understand the appeal. I wrote over the weekend that we were watching, one of the world's most important fintech companies commit suicide. And if I had it to write again, I think I might say attempt suicide, because they're not dead yet. And of course, I was writing that before the second, multi-billion-dollar infusion of cash. So all these opinions are subject to changes in facts. I agree with Alexis that much will depend on the level of congressional and regulatory scrutiny. My very strong sense from what we already know from Robinhood's regulatory record is that this is not the best run business in the world. That you have a couple of founders who, obviously are passionate and had a brilliant and profound idea, and were also brilliant at marketing it to people in a very, very effective way. What I think they lack is I think the platform has all sorts of problems that is a kind of known issue. And yeah, Christine, to your point, the appearance on CNBC and various other TV shows of one of the founders just sort of screamed, "I'm over my head." So I don't think it's a company with the best governance. I don't think it's a company with the best technology. I mean, it's amazing that they can pull a lever and raise billions of dollars, but on the other hand, particularly if the way that they currently sell the flow is, if that's cut off or restricted in some way, they're already losing money. So the fact that they're adding more users could mean that they lose more money. I think Alexis has a point. It could get scooped up by a bigger entity. I will be very curious to see if they go through with their IPO. I think most people thought it was coming Q2 this year, and maybe that still happens. But I think we'll certainly learn a lot if they have to file an S1. And the amazing thing, and you can think of this as a good thing or a bad thing, is I don't think they'll have any problem, selling stock. I mean, I think the attention that they've gotten from media almost guarantee. Oh, plus the Super Bowl ad. Don't forget the Super Bowl ad that they're going to have on Sunday. When I saw that yesterday, I was like, people have been drawing parallels to the .com bust. Like Robinhood's just leaning into it. We're going to buy a Super Bowl ad. It just astounds me. Alexis, do you think that David Kirkpatrick says they should do a SPAC? just to put the cherry on 2021.
Probably, why not? Just throw it in there. I mean, I'm not a fan of SPACs. I think they're a little bit shady, but it would fit with our times. So
yes,
why not?
They should do a SPAC available only through Clubhouse.
Oh, God.
Would be the perfect. But
and if people don't know what SPACs are, we should probably just say it's a way to sort of like skirt the normal filings that you need when you go public by sort of glomming onto a company that's like already public, is like my very fast little asterisk explanation.
You should know that Clara Media, the parent company of Techonomy, did a SPAC on Friday. We're very happy about that.
Well, this is just my personal opinion. This is just my take.
No, it's fine. It's fine. No, I mean, look, there are definitely pluses and minuses to SPACs. I mean, I'm being obviously a little facetious, but I am struck by the huge popularity of SPACs within the last 9 to 12 months, and to be honest, I've looked for an obvious explanation for it, and not really found one. I mean, it's not as if it allows you to avoid regulatory scrutiny. It's just not obvious to me why it's become the kind of fad that it is. I mean, have you thought about that, Alexis?
I mean, my understanding is it just seems to be a matter of speed. And this is just my take, but I do believe that we're probably in an equity asset bubble right now. I don't know that we have time to get into why. My short version of that is I think the Fed's rescue of the bond market failed to have sufficient conditions to prevent an asset bubble from forming, right? They didn't prohibit stock buybacks or dividends. They didn't force people to retain their workforce, except for the airlines. They did it for the airlines, and that was Congress, not the Fed. But I think it seemed to me to be a speed thing, right? And when the market's hot, you want to get out there as fast as you can. So that was my take.
Yeah, I think that makes sense. The Techonomy sort of thesis is always about the impact, potentially positive impact, that technology can have on society. And we've spent most of this discussion, looking pretty closely at all the things that have gone wrong for a lot of people. Whether it's with people being manipulated, people losing their shirts, people becoming addicted to things that are quite risky. Is there a bigger picture view here that we should be looking at? I don't take at face value the claims about democratization of stock trading. I think that's mostly just marketing. But are there positive aspects of the Reddit's involvement in finance? Millions of people becoming more sophisticated about investments. Are there positive takeaways here that 5 years from now, 10 years from now, we'll be looking at this as kind of a turbulent birth of something that was good. Christine, do you have any views on that?
I mean, I think it's super fun and kind of super funny at times. Does that count? I mean,
Entertainment value, I
yeah.
suppose. This is a pandemic way of passing the time.
I mean, so is crypto, right? And at some level, and for some people, it can be very serious, right? If they invest a lot of money, it can mean a lot. And sure, folks are losing money too. I do think that it's best to look at this as a lot of people using their fun money for something fun, and I think that we will see more of it. So use your imaginations. I don't know. I mean, there's like lots of places this could go, and whether it does or not, I think that will determine whether we look back on this and see something remarkable coming from it. Otherwise, like right now, it's just like a very interesting blip. I don't know. Like people are drawing parallels to Occupy Wall Street. There was definitely a theme in the news that was sort of like these guys are sticking it to the man, sticking it to the hedge funds, and I think that's what made it such an attractive headline, right? Like and an attractive thing for that was just gaining attention and growing that following. People were really like jumping to Wall Street bets, and that community has gotten a lot more subscribers. So whether that if that stays strong, I think it could be a force.
Alexis, do you want to talk about that, and then you could also address the crypto question that was in the chat?
So I don't think that this is an Occupy Wall Street moment. I think
No.
Occupy Wall Street was about sort of solidarity and like let's collectively lift all boats. And this is very much about like let's have a few more winners. I mean, I think if anything, this is a real good example of what people are calling the K-shaped recovery, right? Because only 47% of Americans have absolutely no exposure to the stock market. Maybe that's not true anymore. Maybe it's gotten a little bit lower,
I think
right?
that's
But
roughly true. Yeah.
no retirement account, no pension fund, no stocks, no bonds, no nothing. And so I think that absolutely are there people that are trading on Robinhood that are, probably low income frontline workers. Yes, probably, especially now after the media attention. But I think largely, probably, I don't have the demographic information, but my guess is it's people with disposable income working from home with a little bit more time, perhaps, to experiment. And I think that this is going to kind of, this is sort of feels to me like a Gilded Age moment, right? Where it's sort of like so many people are on the cusp of eviction. So many people are like, fighting just to figure out, do I pay for food? Do I pay for rent? What do I do? And then we have all these people sort of playing in the stock market and making big joke about like, screwing over hedge funds. And I also think that bubbles can be exacerbated and people's desperation can be exacerbated. And people can get in a lot of trouble when there's a lot of media attention combined with the sort of economic austerity we've seen in the wake of the pandemic, right? There are people who really do need money. They're going to read these stories. Maybe they're going to buy GameStop with $200 they can't afford to lose. And so I worry about that as sort of one of the lessons from this. And I think the solution is not democratizing finance. I think the solution is changing the rules so that casino doesn't have so much power and that we can actually get relief out to people in meaningful ways so you don't need to play in the casino in the first place. And that could be things like baby bonds, it can be more stimulus payments, it could be canceling student debt, which just happens to be a very practical thing the government can do because they just so happen to have 4 out of every $5 of federal student debt the government just has and could cancel if they wanted without Congress. But I guess I just worry about this being a roaring 20s style moment when we look back on it in history.
And on that cheerful note, we should wrap it up. I really want to thank both Alexis and Christine for a stimulating and entertaining discussion. And I'll turn it back over to Josh.
Great. Thanks, Jim. Thanks, Alexis. Thanks, Christine. And yeah, maybe we'll do a SPAC one of these next time around. And yeah, our holding company, right, full disclosure, did go public with their SPAC on NASDAQ on Friday.
I think we should buy Alexis.
Hey, let's talk.
So great. No, thanks for this sort of timely conversation. For all of you out here, we'll be sending out links with the content in the next day or so. So please share it with your communities. And we'll look forward to seeing you at one of our next roundtables. So thanks again.